I used the MonsoonSIM as an experimenting phrase, and then I use it for my advanced managerial accounting class. So the background is these students already had their required cost accounting class when accounting required. They're all accounting majors. And this is their pretty much last or the second last semester to their job, to their graduations. That's the background of this course. And then so my goal is not re-teach everything they already learned. My goal is more of like applications and being critical thinking, and then communication skills, team working skills, presentation skills, so on and so forth. So when I organized this course, I thought, in my mind, cost and manager accounting normally have a couple major modules that we cover in undergraduate courses. There's a cost behaviors, there's cost allocations, and there's control plan and evaluations. So I kind of, in my mind, I cluster my teaching, whether it was this course or the other required undergraduate courses. I kind of rearrange my chapters into 3 different clusters. So that's the concept that normally the undergraduate cost manager accounting covers. Having those in mind, I using the simulation in the way that, as Abdi was talking about, I started with gamification before I even talk about all the concepts and the theories. So just ask them to dive into the simulation as they were the owner of the business, want to kind of derive their curiosity, and they will ask the business questions. Then I'll see how the cost of managerial accounting will play into their helping them making those decisions. So that's the kind of design behind this, how I run this thing. So you guys already see the interface of the MonsoonSIM. I started running this I want to run this very first runs. I'll make it very simple. Instead of making 3 products like the Abdi was demonstrating earlier, the 3 product, multiple locations, because I want to keep it simple. So I want them to only have 1 product and then 1 location to make it very simple. The goal is to kind of get some ideas how to do control other factors. Just have a few factors changing so we can discuss later once they have the results. So the first run of 30 days, very beginning of semester, I run a simple simulation, 1 product, 1 location, ask them to do a little bit pricing changes, variations throughout the days. The goal is introduce cost behavior concept and a little bit budgeting. Keep it simple, 1 product, 1 location, as I said. The decision they have to make is, first of all, they need to rent a space, just like earlier demonstration shows. They need to choose the space. They don't have to choose location this time because there's only 1 location, but they need to determine how large is the space they have to rent, and then whether it's going to be daily fluctuating price, variable pricing on the rental, or is going to short-term fixed with some kind of discount on the rental, or they can opt for long-term rental with a larger discount. So that's the decision they have to make. And they also have to do some retail pricing variations. That I ask them to choose a price that above their cost of sold, which is the purchasing price of merchandise, equal cost of sold, and lower than the cost of sold. Because later on, I want to talk about break even or those kind of things, contribution margin. So that's the purpose I'm asking them to vary their price. So when they run, while we pause the game, I'll talk about, okay, how do you guys make the decision? What factors you guys consider when you're trying to decide what to run, how much space you have to run, and those things. The goal is to talk about how is that decision, why is that decision are important? What's the implication if you fix yourself in a long-term run, but with a larger discount? What's the benefit? What's the disadvantage of have those kind of things, flexibility, risk control, cost structure, all those topics will be discussed among those discussions before they run the simulation. Once just talk about the decision making on the rental. That's kind of my example of how I introduced the cost accounting concept into their gamifications. So they are not forced to think about it, but they are forced to make the decision, and the decision will naturally lead to those questions. And then they run the results. They run 30 days. Once they have the 30 days results in place, then I will ask them about, like, if you look at all the days, the profit that you made, the price that you were at, the revenue from day to day increases. And now I say, do you guys see what kind of pattern emerges? Like, why are the rates of change different between the revenue versus profit? Sometimes revenue increase a lot, but profit does not, or vice versa. Revenue does not increase significantly, but profit increase significantly. Sometimes maybe the more you sell, the more you lost. While the other times profit and revenue increase and decrease at different pace. So we talk about those things, and that's when the concept about variable cost, fixed cost, contribution margin, CVP analysis can naturally be introduced into our discussion. Right? So a little bit, it appears a little bit unorganized, but students are more interested in joining the discussion because that's not something that I learned from textbook, but they have those questions because they want to analyze the results. They want to because they have to make budget for the next 30 days. They need to understand when they forecast the revenue changes, how their cost is going to change, because I'm going to ask them to do a pro forma income statement for the next 30 days. So they have to have those concepts, if not explicitly, at least they have to have implicit, we will be implicitly talk about those things. That's how that runs. So they will have budget. Then after the 30 days, after we did all the things, the next week or so, I gave them time before we run the next phrase of the 30 days. I asked them to, based on the history they learned from first 30 days, can you ask them to prepare a budget, like in terms of how many units you think you're going to sell on daily basis? What's the average price you think you're going to sell? What's the average price of cost goods sold? And what the rent, anticipating the rent, and so on and so forth. And that's the purpose. That's naturally they go into the budgeting part of it, and we need to do so they understand. We'll talk about what do you have to do. You have to have a sales forecast, then you have to have a purchasing budget, then you have to have cost goods sold, then you have to have cash. Check out your cash balance. Do you have enough? And then when do you going to make the purchase? They also have to make that decision. So that's something like operational management can talk about it. What's the best inventory level? But we don't go to too much details. I just ask them to create a budget. All right. So so far, any questions? I can't see the chat. So if you want to ask questions, please unmute yourself. So that's that. I can show you something about what they did. So as the earlier demonstration shows, once they run the simulation, there is a various data they can look into. I just take a screenshot of this particular one. Is you have operating expenses accumulated for 30 days. You have net profit accumulated this way, not on daily, but the revenue is on daily basis. So whatever the pattern shows here, we'll have discussions, and then why this is the case, why the line looks like this, and then why there's a kink here on the net profit when the operating expenses are pretty smooth upwards. So those are the questions our teams, our student will kind of have discussion about. All right. And then let me stop this one. I'll show you what the my Excel look like. Okay, so this is like 30 days, and they can download different data, and this is one of the data sheet they can download. This they can calculate the daily profit. On the right hand side, you can see the net profit operating, and there's overflow. That means that particular team ran not enough space during the spike of the holiday season. The demand comes up. No, I'm sorry. So no, sorry. They anticipating the demand coming up during the spike of these 2 days. So they bought a lot of inventories, and that creates overflow. There's overflow charges. So that also can be had, the discussion about how do you control that, because that significantly decreased the profit and so on and so forth. So don't just example, and then here I ask them to calculate break-even point based on the data they got here, so they can do a different price point. Their contribution margin is a little different, so they can calculate break-even point, a different price range, price point. And if I like, I can talk about operating leverage at this point, because the changes around the break-even point, the profit changes a lot if you just move the little needle a little bit, but away from the break-even point, the profit change percentage, relatively speaking, is not as significant as around the break-even points. So those are the questions we can talk about. For the budgeting part of it, I can show you an example what they did for the budget. Just sample of my student work, some of the student work. Where's that point? Okay, thank you. So here, this is a later semester. They did it like 3 project, like multiple locations, 3 product line. So they will do, I expected retail, they gave you a bunch of things. This is what they created. Average selling price, accumulated cost goods sold. So that they have all those on the rent is going to be, and then they justify the wages increases 20%, and if that's what they want, that's their strategic plan. They can budget that in there. How much marketing they want to spend on each of the locations, so on and so forth. So this is an example. So I have them submit this before I run a simulation, and then post the simulation, I will have them compare the actual results against the budget number. Then we'll talk about how to do performance evaluations, what is the variance analysis, so on and so forth. That's what I was doing. BD also wanted me to talk about a little bit data and data visualization. I asked my student to do, so here goes. Hold on just a second, let me move this to another screen. Can you guys see this Tableau? I put it on the screen.
Yes, we can see it.
Yeah, so this is one of the team. Before they run the simulation, they're using Tableau. They extracting the live database data from the MonsoonSIM they run in the previous days, and they also using the data from the forecasting module, and so they were strategizing, visualizing what's going on, the different location demands on different product, the square footage they needed, because based on the demands, they kind of anticipate how many inventory they need to buy at different days, and they need understand then the square footage they need for each locations. This is a forecasting module that MonsoonSIM provides, but they translate this, they download the data, they translate into Tableau, and this is what they did. So products, some of the other sheets here. I don't grade their data Tableau. Because this is our first semester, so I just ask them to, I introduce the Tableau to them, ask them to exploit it, how they can help, Tableau can help them to visualize their thing, to help them to be a better manager for their company. So this is what this is some of the examples they did. They also, this is there's another thing that after the simulation, then they will have another data. This team has another Tableau visualization of what they accomplished for the 30 days after a run. So these are the one that a few sample examples. And there is another one I can show you here. What was my this is a video. I asked them to, again, my goal for this course is analytical skills, communication skills, public speaking skills. So the team has to create, they do in-person presentations, they also do video presentations. This is one of the video presentations they did. Just give you some samples. This is a visualization using Tableau. And I'm just going fast forward to save us some time. So this is again, they're using Tableau, screenshots of Tableau.
How the other profits work really hard when we lower the prices.
Yep, so those are the things they did. Let me see another one right here. This is another team, different team. They're using visualization of their market. Like on the left-hand side is the forecasted demand for the entire market. And on the right-hand side is what they did for their team. So these are the things they were trying. They're using the Tableau to help them. And this is just a short snaps of my experience when I used this one the first time. To put everything together, then the other topic we did talk about during the some of them I did talk about during the semester is like when I turn on the multiple locations and multiple products. Again, I'm asking them to do P&L for each location, for each product. That will force them to thinking about cost allocations for procurement, for example, just for simplicity. Everyone using this one single procurement department. There is a significant HR cost for procurement department, then how to allocate the procurement department cost. There's a team using the average. There were a team using the revenue allocation base by the location. After some kind of discussion, one of the team using activity-based costing. They're using, because there's a data in the simulation allows them to track down how many purchases the procurement department did for each of the locations. So using the activity-based costing, using the number of procurement did for each location, that's how they allocated. And then interesting enough, they were very happy to report that one of the location was profitable when they allocating the procurement department based on the average. And then when they switch to activity-based costing, suddenly that particular department become unprofitable. So introduced, so that's a very good self-discovery process for them to appreciate what activity-based costing does for them. And then when we turn on the manufacturing module, means they can build factories. Then you can talk about make or buy. Do you stay? Some of the teams stay with always buy from others. They don't build factories. The other team build factories. So we're talking about why you want to build factories instead of buying it. Why you are buying it, not building the factory. And there's a team that they not only they build a factory, but they still maintain buying some of the portion buying from outside, some of the portion they make themselves. So I said, what triggers you to making that kind of decision? What are the factors, what criteria is for you to decide when to buy, when to make, so on and so forth. So those are, and the capital budgeting was introduced. When you build a factory, there's a fixed investment. Do you do any analysis of how long it takes you to recover your investment? Those are things. So to summarize everything, there's a learning curve exists. You're learning how to play and how to coordinate among their team members, whose role is, who plays what. Because the speed of the simulation is pretty fast. So they should they need to dedicate. The student are very interested in competing against other teams. They apply a lot of knowledges. The knowledge they learned, they suddenly are able to recall what they learned. Well, with the gamification reinforce what they learned in the previous class. The course is a senior level elective, but I think can be implemented in an entry level cost accounting class. Lastly, but the instructor need to be trained extensively to reach a certain level of familiarity with the simulation to take full advantage of the MonsoonSIM versatilities. All right, that's all I have. Thank you.